Welcome, everyone. Thank you for joining us today for our special webinar on the 2024 election and its impacts on the financial markets with our guest speaker, Scott Eckel. Before we get started, please know this webinar is being recorded and a replay will be posted on our website, evansmay.com. And thank you to those who've submitted questions in advance. If you have questions during the presentation, please enter them in the Q&A feature that you can find if you hover over the bottom of your screen. We'll have time at the end of the webinar to address those questions. Now, to our esteemed speaker and boots on the ground in Washington, Scott Eckel. Scott is the Managing Director of Legislative and Regulatory Affairs for Charles Schwab. In his role at Schwab, Scott engages with policymakers on Capitol Hill and in the regulatory agencies on issues that are important to Schwab and its clients. Examples of these issues he's covered include tax, banking, retirement, market structure, cybersecurity, and privacy. Before Schwab, Scott served in senior roles in Congress for members of the Senate Banking Committee and House Financial Services Committee. Today, he'll share his expertise on the ground in Washington, D.C. on policy, politics, and the 2024 election. Thank you for joining us today. Let's dive into the conversation. Welcome, Scott.
Well, thank you very much, Brooke. I appreciate the introduction. As you mentioned, I'm with Schwab's Office of Legislative and Regulatory Affairs. It's a small little team here in Washington, D.C. And some of you may have in the past heard from my colleague, Mike Townsend. He speaks a lot to clients out around the country. And that's sort of his main job is sort of talking about what's going on in DC and writing about it for Schwab clients. I do it every so often, but my main job is actually, as Brooke sort of mentioned, following what's going on here in Washington, engaging with policymakers in both Congress, at the SEC, Treasury Department, et cetera. And then as issues arise that impact Schwab and our clients, sort of engaging with those folks and sort of giving Schwab's point of view on those matters. And so that's sort of a long way of saying that I'm a lobbyist. I'm a financial services lobbyist. Some might say that's the lowest form of DC's swamp creature. But that being said, I actually sleep pretty well at night. And I think part of the reason I do is the company I work for and sort of who we represent. And again, it's Main Street investors all over the country. And I think policymakers, because of that, want to hear our point of view. You know, we represent, one way or another, like roughly 35 million investors around the country, engaged investors, engaged in their communities. And so I'm able to sort of put my white hat on when I go in and talk to policymakers and give our point of view about how what they are proposing will impact millions of folks all over the country. So question sometimes comes up over the years, well, how do you become a lobbyist for Charles Schwab? Well, I'm from a little town in New Hampshire, ended up working for a senator from New Hampshire who was on the Senate Banking Committee, and I ended up handling those issues for him for a time. But then in 2008, he lost his reelection bid, and when you're a staffer for a member of Congress, if they lose, you lose, and I was sort of out on the street there for a short period of time. Ended up going to work for a member of the House Financial Services Committee in early 2009. And of course, that is, right in the depths of sort of the financial crisis and the immediate time after that. And what was happening in Congress at that time when I went to work for this member was basically what became Dodd-Frank. And, sort of the largest, piece of sort of financial services regulation for probably a couple of generations. And while we were sort of the minority party, the members I worked for, we weren't really writing it. We were certainly engaged on all those issues, learning all about all the ins and outs of the different things being considered as a policy response to the financial crisis. And then as things happen, a little bit later, Congress flipped, control, and the member that I worked for became the chairman of the what they call the Capital Markets Subcommittee of the House Financial Services Committee. And so I served him in that role for about a year and a half before coming over to Schwab about 12 and a half years ago. And so now I'm sort of on the other side of the table in those discussions that I used to have when I worked for members of Congress. Now I go in on behalf of Schwab and our clients to talk to folks up there on Capitol Hill. So it's sort of from that perch that I'm coming to you today from Washington, D.C. And we'll cover, I've plan to cover a series of things here today. First, just sort of the lay of the land in Congress. And then after that, maybe a little bit of the lay of the land on the regulatory side, stuff that's been, regulatory proposals coming out of some of the agencies that impact the financial services sector and Schwab and investors. And then after that, obviously we've got this election coming up. We're only 12 days out. So we'll talk about sort of where we stand in the election. And I'll try to give you a little bit of analysis of what I see there and what might happen. So I guess with that, we can move to the next slide. The lay of the land in Congress. And so the state of the Congress for some time now is, I would say, been mostly paralyzed. You've got split control in Congress, with Democrats holding a very narrow 2-seat majority in the U.S. Senate, Republicans holding a 7-seat majority in the much larger House. So out of 435 members, they can only afford to lose 4 votes, or they sort of lose the majority. And Republicans in particular, it's been sort of highly publicized, the struggles they've had in sort of advancing anything really in the House in the last couple of years. So in the past, whereas it's been difficult, it's always difficult to pass something through both houses of Congress and getting it signed into law. For the last couple of years, at least, it's been hard even just to get something through one house of Congress. So that's sort of where we stand with that. The Republicans I mentioned have had trouble. It says here that they've struggled to remain unified. I think that's a little bit of an understatement. Of course, starting off this Congress, you had it took them 15 separate votes just to get Speaker McCarthy into the speaker role, and then about 9 or so months later, of course, he was unceremoniously sort of dumped out of that role. And after several sort of tries to find a replacement, they found a congressman named Mike Johnson, relatively unknown guy from Louisiana, who ascended to the speakership, has now held the role for about a year. He's run into some of the similar problems that his predecessor did in trying to remain unified within their caucus. But that being said, I think if more on this later, but if Republicans are able to hold on to the majority, he probably holds on to the speakership next year. If they lose the majority, then I'm guessing he probably would be out, and there would be a battle sort of for the then minority leader spot in the House for Republicans. Over in the Senate, Leader McConnell earlier this year actually set the all-time record for the longest serving leader in U.S. Senate history. He's had some health issues, though, in the last couple of years. And so he announced that at the end of this Congress, he will step down as leader. He'll still remain a senator from Kentucky, but he'll step down as leader. And the two main folks vying for the Republican leader in the next Congress are both named John Thune, senator from South Dakota, who's the current whip, the second ranking member of Republican leadership in the Senate, and then John Cornyn, senator from Texas, who's a former whip. They are probably the two main candidates to replace Leader McConnell going into the next year. Now, I mentioned that not much is getting done in Congress. Every so often in the House, they will pass something either to, try to put some pressure on the Senate, maybe to pass something. For instance, they passed some legislation earlier this year that would set a federal framework for regulating digital assets, crypto type items, but the Senate so far has had no interest in passing that on their side of the Hill. And then sometimes Republicans in the House will sort of, if they have something that they're pretty unified on, but they think can sort of split Democrats, they'll sort of pass something to try to earn some political points and drive a wedge into the other party. But again, even that's a little bit few and far between. On the Senate side, they don't even usually try to pass much of anything. They spend most of their time passing nominations of either federal judges or folks that are being, been nominated for leadership positions in sort of cabinet agencies. So we can move on to the next slide. Sort of keeping on this theme of Congress not being particularly active on things, one of their fundamental roles in Congress, maybe the fundamental job, is the power of the purse. And so, every October 1st, which is the start of a fiscal year, by that time of year, they were supposed to have passed all 12 appropriations bills. The federal government sort of diced up into these 12 different areas. And Congress is supposed to pass the individual 12 appropriations bills each year to fund the government the following year. So this year, the good news is the government didn't shut down on October 1st. Congress did pass something, but what they passed is called a continuing resolution, which is what they've often done in the last several years. In fact, it's been since 1997 was the last time that Congress actually passed all 12 appropriation bills on time by October 1st, 27 years ago. So what they did this year, which has been a lot of years, is they passed this continuing resolution, which basically just sort of kicks the can down the road for some period of time, in this case to December 20th, right before Christmas at the end of this year, when we'll be in the midst of sort of a chaotic lame duck session of Congress here before the new Congress gets sworn in January. So that's when they'll have their chance to either pass some appropriations bills for the remainder of the fiscal year, or potentially more likely, they may just pass some sort of another continuing resolution either for the full year or farther into the year at that time. Now, with them not passing, they're doing their sort of annual budgetary job in sort of the way that it was laid out, doesn't mean they're not spending money. We've got, in fact, this year alone, we've got another deficit of roughly $1.8 trillion just for this fiscal year. And our accumulated federal debt now exceeds $34 trillion. And so those are big numbers. It's almost hard, once you get to a certain size number, it's hard to almost wrap your arms around what does that number even mean? Like 34 trillion, 3 trillion, 100 billion. What does that mean? So I'll try to contextualize this level of debt that we have here with $34 trillion. And this current year alone, we've spent $950 billion just on interest on the national debt. And that $950 billion is more than we spend as a nation on our entire annual defense budget. It's almost as much as we spend in a year on our entire Medicare budget. So that just try to contextualize a little bit what we're talking about here, the level of debt that we have as a country. We can move on to the next slide. So as much as not a whole lot has happened the last couple of years in Congress, I can almost guarantee that something pretty significant is going to get passed next year in Congress, and that is going to be a pretty significant tax bill. And so why do I say that? It's because back in 2017, when former President Trump was president, they passed a pretty significant tax bill that year. It was called the Tax Cut and Jobs Act, TCJA is for short. And that package, among other things, lowered income tax rates for individual taxpayers, set a higher standard deduction, among other things, set a higher exemption for the estate tax, which may be relevant for some of you. So these individual components of the TCJA are all set to expire at the end of 2025. And so if Congress does nothing, 62% of American households will see a tax increase by default. And so neither party, no matter who wins, the presidency and who gains control in the two houses of Congress here in the upcoming election, neither party wants that to happen. So that's why I say no matter what the makeup is post-election, there's most likely going to be a package that passes. Now, what's in that package will vary quite a bit based on the upcoming election. So for former President Trump, he's been sort of passing out like candy on the campaign trail, all these ideas to further cut taxes. So, not only extend all those expiring tax cuts, but end the taxation of tips, no tax on Social Security, maybe no tax on overtime, with very few things that would actually pay for any of these further cuts in taxes. He does talk about significant new tariffs. That being said, I think even sort of the higher end of a new tariff regime would bring in about $300 billion or so. And we're talking about even just extending the tax cuts would what they say score in budgetary parlance a $4-point-something trillion additional expense. And if you add in these other tax cuts, you're talking, $5, $6, $7 trillion in additional expense. So the tariffs aren't covering that. And then on Vice President Harris's side, she's her ideas allow for a certain more of additional revenue because she would let the tax cuts, if she has it her way, expire for certain wealthier taxpayers. She would raise the capital gains rate on folks making $1 million or more a year. She also has some ideas also, though, to expand tax cuts. She'd expand the child tax credit, new tax credit for home buyers, among other things. One idea she has, or at least that President Biden has, and she hasn't said she doesn't support, is potentially opening the door to taxing unrealized capital gains. It would only be as proposed for, pretty wealthy folks with a net worth of $100 million or more. But from the standpoint of the investment community that we sort of represent at Schwab, taxing unrealized capital gains that's a pretty big step. It's pretty hard to implement. There'd be a lot of major issues there, and it just would sort of mess with the whole idea of, some of the incentive structure of investing in general, and even if it's only for a small subset of taxpayers at first, it's sort of the proverbial nose under the tent, and who knows, open to then maybe hitting more folks later on. I think it's unlikely that would be ever signed into law in the next year or so, but not completely impossible. And part of that, I would say, is if Democrats somehow controlled both House, Senate, and presidency, the lead tax writer of the Senate Finance Committee for Democrats, Senator Ron Wyden for Oregon, this has been an idea that he has been supportive of for some time. So I think under that scenario, there's a chance that it's some sort of unrealized cap gain taxation could get in there. It's a small chance, but I just wanted to sort of highlight that because from our world, that's a pretty big that would be a pretty big change of policy. We can go to the next slide. So as much as there hasn't been a whole lot going on in Congress the last couple of years, that has not been the case on the regulatory side. Regulatory agencies have been proposing a whole bunch of stuff that would impact investors, financial services world, especially at the SEC under Chair Gary Gensler, especially in his first couple of years, he was just churning out proposal after proposal after proposal. And we would say maybe, unfortunately, too often, we would say these proposals were solutions in search of problems, maybe ideological rather than reality driven. And I'll just give you a couple examples. So he has on equity market structure, which is basically the rules around how Schwab and other broker dealers route our clients' trades through the system of exchanges and non-exchange, of getting your trade executed. Schwab has been around for 51 years, and what we have sort of always have been about is allowing more people to participate as investors, and by doing that, we're driving down the costs for the last 50 or so years of of trading commissions, which are now at zero. Of your trade execution quality, we're getting 90+% of our trades executed inside the bid-ask spread, and so that's been what we've been all about. And we're not the only ones. There's other companies that are similar to ours that have helped drive down the cost of trading for these last many years. And yet, so some would say it's never been better to be a so-called retail investor in our environment. And yet, Gary Gensler came out with a 4-proposal, 1,700-page package that would completely sort of change the rules around how we'd have to route our orders through the markets. And so, we had some concerns with that, especially because as we analyzed the rules under a best case scenario, even we think that the average cost of a trade for a retail investor would go up. Under a worst case scenario, you potentially sort of break the markets to one degree or another, and folks would lose confidence in that. So we've certainly weighed in on that. The good news there is it seems to be sort of winding down as we get to the end of this year. And they've passed 2 of the 4 proposals on equity market structure, the 2 that we would say are the least controversial and could have some modest benefits, I think, for the average investor. And the 2 that we would say are the more controversial so far have not gotten to a finalization stage and hopefully never will. I'll just bring up one other proposal from out of the SEC that was concerning to us. It was It was supposed to address AI in financial services regulations, artificial intelligence, and sort of everybody's been talking about AI in Washington, of course, not just in Washington, all over the country. It's a big issue for investors and for, sort of ethicists in business. How is AI going to impact customers in a variety of different places? And so it's certainly an issue worth considering and thinking about from a regulatory standpoint. How are we going to regulate AI? This particular proposal was they called it on predictive data analytics interactions with customers. It was unfortunately the one example coming out of Washington where I think generally regulators have taken a slow approach to consider these issues. The SEC on this proposal, it came out over a year ago. It was a sort of shoot first, ask questions later type of thing. And so the way it was written, it would apply to much broader than just AI interactions with clients. It would really apply to all technologically based interactions with clients. And in this day and age when folks are, processing trades over their phone or over their desktop computer, et cetera, almost every interaction or many interactions are technology based. And again, the way the rule was written in such an overbroad way, in the past, you've always, when you make a recommendation, you've been able to disclose any conflicts you have when making a recommendation. The way this was written, you'd have to eliminate any conflicts or interest in that recommendation. And so it really sort of was an existential threat to sort of all of the technological gains we've made in financial services over the last few years. And so we certainly pushed back against that, both with the SEC and with Congress. And so let me just sort of jump back for a second. I sort of talked about how I'm a lobbyist here in Washington, and then I basically went on to say how little Congress is doing the last couple of years. So you might have a question, well, what do you actually lobby on if that's the case? That's a good question and a fair question. So what we've done, especially in the last couple of years, is what I would call bank shot lobbying in many cases. So Congress has oversight over these regulatory agencies, and they have, the power, as we discussed, the power of the purse. They can hold hearings. They can bring up leaders of these agencies for hearings and ask them pointed questions, et cetera. And so one thing we do from time to time is we go to Congress and we say, listen, there's this proposal at the SEC that we've got some real concerns about how it's going to impact our ability to interact with our clients. And in this case, we went to the co-chairs of the Senate AI caucus. And yes, there is an AI caucus. There's a caucus for anything that you can think of and probably a lot more things. So we went to them, expressed our concerns, bipartisan. We got a Republican and a Democrat, and they listened and they said, I think we understand your concerns and agree. And so what we got this letter. This was from May of this year. A letter from the two co-chairs, Republican and Democrat, of the Senate AI caucus, plus a couple more of their colleagues, to Chair Gensler, saying, we think you've got some real problems with the predictive data analytics proposal that you have over there. We think you should withdraw it and then potentially repropose at some point when you've figured out a way to write the rule better. And, it just a few weeks after that letter was sent, the SEC actually did announce that they were withdrawing the proposal. So I've said this before. If you get into my type of business and you like to have a lot of concrete accomplishments at the end of the day, it's the wrong business for you. But in this case, this was actually about as concrete as you get. It was a nice outcome for something that we worked on there. And I think in the end, it'll be a good thing for investors that rule, at least as written, didn't go forward. Maybe just one other note that I've got at the bottom of the slide, the Chevron doctrine was overturned recently. So what's that? So going back, 30 or so years, there was a Supreme Court case involving the company Chevron. And in that court case, the Supreme Court basically said, we're going to follow this doctrine where we're going to sort of cede some authority to regulatory agencies that basically, if they say they've got the power, we're going to take their word for it to a certain degree that they can pass these regulations that they want to pass. And that was sort of an added. That's I'm not a lawyer, so don't take me to the to the exact wording of how it went, but that's sort of the gist of it. That was how things worked for a long time. And then in this past year, the Supreme Court overturned the Chevron doctrine. So now courts are going to be less deferential to agencies. Agencies are going to have to cite more specific statutory authority that they have from Congress when writing rules going forward. And frankly, at the end of the day, they're probably going to find themselves in court defending their rules more often as a result of that. So that's sort of just a big picture item that we're following now that's just gone into effect in the last few months in sort of the meta world of regulatory agencies and rule writing. Okay, so that's a bit on sort of the policy side, and now I think with our remaining time, we're going to turn to the upcoming elections here that are now only 12 days away. I'll let this slide sink in for just a couple moments. If you can picture it without all the X's, that's pretty much where the field stood a year or so ago for this election. So pretty big field, certainly on the Republican side. And that being said, I think for the vast majority of this campaign, for the last year plus, really, nobody else beyond former President Trump and current President Biden had much of a chance. You saw them, they both controlled the infrastructure of the two parties, and they went through the primary season and didn't really receive much of a serious challenge. I mean, early on, there was some thought that Governor DeSantis maybe might do well, and then Nikki Haley sort of became the de facto anti-Trump vote within the Republican Party, but really Trump or Biden really were never really seriously threatened throughout the entire primary season. And then that was the case until that fateful debate in June, where President Biden, I guess you would say, gave a performance that caused some serious concern amongst both voters, Democratic voters, but also I would say Democratic elites here in Washington. And I think they came to the conclusion that if things kept going as they stood, that the Democrats had very little chance of winning the election in November. And so the elite sort of sprung into action with a high-level pressure campaign to try to get President Biden to convince him to drop out of the race. Now, these issues of sort of questions about the president's competency or whatever you want to call it, ability to handle another term as president, were not really new. If you go back, there were polls from a year or so ago, September of 2023, that said that 67% of Democratic-leaning voters wanted a new nominee, and it was largely over these concerns about age. But so it wasn't new, but I think what happened there was it was an opportunity, perhaps, where I think the folks within the higher reaches of the party said, okay, this is our chance. This is our last chance if we want to change the dynamic here in the race. And so again, that sort of pressure campaign ensued for the next 3 weeks or so. We can go to the next slide, which then led to what I would call the 8 days that were perhaps the biggest roller coaster ride in at least modern campaign history. And I'm talking about July 13th through 21st. So July 13th was the day that President Trump was shot in Pennsylvania. And once that happened, the pressure campaign on President Biden had to stop as everyone digested that news. And then 2 days later was the start of the Republican convention, and President Trump had sort of a triumphant return to the stage there. And then ensued 4 days of a generally regarded, well-run Republican convention. And coming out of that convention, it almost sort of seemed like a coronation of sorts for former President Trump. And so, again, this whole time, the pressure campaign on President Biden was paused. The convention's over on that Thursday, the 18th. On Friday, the campaign ensues. Over the weekend, it steps into high gear again. And by Sunday, July 21st, 8 days after President Trump is shot, President Biden announces that he indeed will not seek re-election and that he is endorsing his Vice President Harris to succeed him on the ticket. The next day, within 24 hours, really, it was actually pretty amazing in my view how quickly it all came together. But Vice President Harris was able to sort of consolidate support, and all of the folks that might have been folks that might have challenged her for that sort of nomination, endorsed her. Then in the ensuing couple of weeks after that, we had a strong Democratic convention. Harris gave a good speech at the convention. And I think what you saw then is this chart reflects what I would call a relief factor among Democratic voters. Is okay, we can live with Vice President Harris as the nominee. We think she gives us a viable chance to win, and so their enthusiasm by August, had basically equaled the Republican level, and so that was sort of that whole process then brought us back to where we quote unquote should have been all along, absent doubts about President Biden's ability to run for another term. We can go to the next slide. And where we should have been, if you want to say in quotes, all along, was a very, very close election. And so what you see here on the screen is on the left is these are the poll numbers that we saw for former President Trump coming out of the Republican convention. This was the Thursday, July 18th was the last day of the convention, and he had commanding leads, solid leads anyway, in all 7 of the states that are seen as being the swing states that are one way or another going to decide this election. In 2020, President Biden won 6 out of 7. Former President Trump won North Carolina. President Biden won the other 6 in 2020. As you can see, Trump had a pretty solid lead in all states in July 18th. Now, fast forward to yesterday's poll numbers, and it is about as close as could be humanly possible, I think. 0 point and 1 point leads one way or the other. The margin of error generally is like 3-point-something%. So all 7 states are well within the margin of error. This is basically full-on toss-up land for all 7 states. Couldn't be closer. The one thing, or a couple things I'll sort of say on that is up until 3 days ago, Harris was leading in 4 states and had been for some time. But Trump has recently taken the lead in Pennsylvania, which I call the swingiest of the 7 swing states. I've never sort of wanted to predict who was going to win the election, but I have gone so far as to say whoever wins Pennsylvania will likely win. In my view, I think if you just go through the scenarios, that's the one that's if you can win Pennsylvania, assuming, let's put it this way, if Trump has generally been leading in the more southern states or of Sunbelt states of North Carolina, Georgia, Arizona. Generally speaking, Harris had been leading in the Rust Belt states of Pennsylvania, Michigan, and Wisconsin, but Pennsylvania being the one that was always the closest. So, whoever could win that one, I've always said, may have a good chance of winning overall. The other thing I would say is that generally speaking, over the last 2 weeks or so, these numbers have not just improved in Pennsylvania, but pretty much across the board. They've been moving in Trump's direction lately. The Michigan and Wisconsin numbers, for instance, a couple weeks ago were more like 2.2% or so for Vice President Harris. Now they're down to 0.5% or less. And 538.com, which is Nate Silver's website. He's a prominent sort of statistician who tracks elections. For the first time since they started tracking Harris v. Trump sometime in August, 2 or 3 days ago, for the first time, their probability algorithm slightly predicts a Trump victory over Harris. It had always been Harris up until just about 2 or 3 days ago. So those are some of the things, the sort of the trends of late in the poll watching. We can go to the next slide. we're 12 days out, and at this point in this election, there's not a whole lot of like major events still to go. We had probably our only debate back a month plus ago. Had the vice presidential debate. People have been voting in many states now for at least a month. You got millions of votes already cast. So it's a pretty as close as the election is. It's people know who these folks are, and they've taken sides at this point. So it's not really about undecided voters so much at this point. It's more about the unenthusiastic voter and really what you would call the ground game, especially in those 7 swing states. How are the two campaigns going to get folks out to vote, especially folks that maybe aren't as enthusiastic about who they are leaning towards? And so maybe for Trump, that might be for some socially conservative voters that question maybe where he's been on abortion or something like that. For Vice President Harris, it could be about maybe getting some young voters to the polls to vote for, especially maybe some younger voters in Michigan that have concerns about the Biden administration policy in the Middle East, for instance. There's a lot of Arab descent voters, Lebanese voters in Michigan. That's going to be a close vote. Those getting everybody out that is a traditional Democratic voter to support you is going to be critical there. So those are some of the dynamics that we're looking at in these last 12 days. We can go to the next slide. So beyond the presidential level, there's obviously the votes for the Senate and the House. The Senate is interesting in that you have 100 senators elected to 6-year terms, so that every 2 years you have roughly 1/3 of the Senate on the ballot. And the makeup of that 1/3 of the Senate can vary a bit. And so, but it just so happens that this year there are many more Democratic seats sort of up for re-election than Republican seats. And there are many more Democratic seats that are potentially close than Republican seats. And so, remember, Democrats just held a 2-seat majority in the Senate right now. Republicans only have to flip 2 seats to gain the majority. In fact, they only have to flip 1 seat if Trump wins the presidential, because then they would have the vice presidential tie-breaking vote. So, but 2 votes, 2 seats they flip, they definitely have control. They already have one in the bag. Senator Manchin from West Virginia announced he's not running for re-election. Republicans got the sitting governor to run for that seat. It's a bright red state, West Virginia. They've got that one. In Montana, Senator John Tester, who's been there for a while out of Montana, he is currently running roughly 7 or 8 points behind his challenger there. It's looking more and more likely that Republicans are going to flip that one as well. So right there, that's enough to flip control of the Senate. There's 3 Democratic sitting senator seats that are that were in so-called red states from 2020. All of them are up for re-election this time. The third one is Senator Sherrod Brown over in Ohio, who happens to be the Senate Banking Committee chairman, a committee that we work a lot with in our role here in Washington. And that seat is a full-on toss-up. He had been marginally ahead, I would say, for much of this time. I would say just in the last week or so, it's looking like he potentially has lost the lead in Ohio, or it's about as close as it can be. So that could be a third. Then as you look down at the bottom of this slide, you've got Pennsylvania, Michigan, and Wisconsin are also what I would call are very, very close seats. Pennsylvania and Wisconsin in particular. You've got Senator Bob Casey in Pennsylvania, Senator Tammy Baldwin, Wisconsin. Those races have gotten extremely close in the last week or so. And then in Michigan, it's an open seat. Senator Stabenow is retiring, and that seat is also in the toss-up category. And Nevada is another one where Senator Jackie Rosen is running for re-election, and she had been fairly sizably ahead in that seat, maybe 11 points. That one's tightened up to more like 4 or 5 recently, so that's another one to keep an eye on. Now, all of this time, it was thought that Republicans didn't have any vulnerable seats, but it turns out, as we've looked at some recent polls, they do have some potential vulnerable seats themselves. Texas, Senator Ted Cruz, he's been only running in most polls 2 or 3 points ahead down in Texas recently. Now, Texas has been a little bit of a white whale for Democrats for statewide elections in the last 20, 30 years. They really want to try to win one. They haven't yet, and it's still going to be tough, but that is looking closer than people thought. Florida, similarly, Senator Rick Scott up for re-election down there. He's running around 3 or 4 points ahead, but Florida has become redder over the last few years. It used to be a pure toss-up, not so much anymore. And then the one that's kind of come out of nowhere is in Nebraska. Senator Deb Fischer, that should be a pretty bright red state there, but there is an independent running with the last name of Osborne. And if for those of you who are college football fans, that was the same last name of a longtime beloved University of Nebraska football coach, had that same last name. And I'm not saying that's why he's doing well, but he seems to have put a scare into Republicans in that state. It's been hard because that state was off the sort of radar of even being close. So there's not a lot of public polling you see. Interestingly, the two campaigns have been putting out polls lately. And every time Osborne, the challenger, puts out a poll, it shows him up ahead. And every time Fisher puts out a poll, it shows her up ahead. So we'll have to see. I haven't seen any real sort of nonpartisan polling there to see really what the state of the race is. But that's one that's potentially in play on the Republican side as well. We can go to the next slide. In the battle for the House of Representatives, there's 435 seats in the House. About 10% of them, though, are really rate as competitive. So we're talking only about 43 seats there. I think sort of just structurally, I think Republicans are defending more seats than Democrats in districts that the other side's presidential candidate won back in 2020. In particular, Republicans are defending a fair amount of seats in both New York and California, which are pretty blue states that in a presidential year, more of your voters are going to come out. Those could be tougher to defend for Republicans than average seats. So in some ways, you could say maybe Democrats have a little bit of an advantage to flip the 4 seats they need to flip to get the House. That being said, I sort of feel like whoever wins the presidency probably just carries the House. So, one way or the other, they'll have enough sort of to pull up certain candidates around the country if they're up a little bit in the presidential side. But we'll see. One thing it sets up is a dynamic. In the last several elections, 8 of the last 9, you've had a change in either the White House, the House, or the Senate. One of the 3 at least has changed in 8 of the last 9 elections. But in the history of our country, you've never had the House flip in one direction and the Senate flip in the opposite direction in the same election. But that could possibly happen this time. So we'll keep an eye on that. And then finally, we can go to the next slide. So, what are some things to keep an eye on in our markets or whatever, or in relation to an election? If there's a recession, that's bad news for the incumbent party, but we didn't get a recession despite a lot of people predicting one at some point in 2024. Didn't happen, so that's kind of off the table. But it's sort of a corollary to that is that market performance in the last 3 months leading up to an election has predicted 20 of the last 24 elections. So if the performance is good, that's good, generally speaking, for the incumbent party, and vice versa. The performance so far since August 5th, which is sort of the start of that 3-month period, has been pretty good. So that would tend to be helpful to Vice President Harris. We'll see if that trend continues. And then I would say just one other thing. I would say markets probably don't care, from what I've been hearing and talking to folks about. Markets probably don't care too strongly either way about who wins in November. But what they might care about, or could be a negative, is if we get an outcome one way or the other, great. the concern is if we don't get an outcome, and that's a distinct possibility that we have. It's too close to call at the end of election night, and then you got to count all the early votes, et cetera, and we could have a situation where it lingers for a while and it calls into question who the next president is, and that uncertainty, I think, is maybe what markets don't like a lot. So we'll see how it all comes down in 12 days. And with that, I think I will stop talking and happy to take some questions.
Thank you, Scott. Very good information. We have had a few questions come in, and then we'll go through those and see where we go from here.
Okay.
There's a question about the deficit that came in. So the question is, with deficits running at almost $2 trillion and rising, what is the thought about when rates start to rise longer term? And do you have any speculation about when that might occur? And any thoughts around the deficit and concern about that, even in Washington?
Sure. So, I mean, it looks like, because the Fed, obviously, they control sort of the short-term rates for their monetary policy, but they have less control over the long-term rates. And we've seen even since the cut, the 50 percentage point cut in September, that long-term rates have already started coming up. And I think that does reflect sort of some concerns in the market about our long-term sort of, at least partially, that's reflecting long-term deficit concerns. We've got the situation in the United States. We have the strongest economy in the world. We've got the world's reserve currency, and that's this sort of golden handcuffs that allows us to keep running these deficits without maybe the repercussions that other countries might face in the marketplace on rates. That would sort of be a governor on that. So far we've been allowed to get away with it until we don't. And so, I think you're starting to see in these long-term rates that are already there, I think some market discipline or trying to impose some discipline. Now, when I speak to audiences like this, I think the deficit is front and center concern, but it doesn't seem to play that well in the broader sort of political dialogue. Neither candidate is really talking about addressing deficits. Like I said, they're both sort of throwing out a lot of net deficit increasers proposals out there. It doesn't apparently play very well on the broader campaign trail. That being said, I think congressional tax writers, as they head into next year when they're going to write this tax bill, are wary about adding too much more debt in this package. I'm not going to say that it's going to be deficit neutral, but I don't think they just want to write, total blank checks to whatever they come up with. So we'll see how that plays out.
Thank you. Interesting. I saw on your regulatory tsunami slide, going back to policy, there was information there about the DOL fiduciary rule. I feel like that's been in some of the headlines. Can you expand a little bit on that?
Sure. Yeah. I kind of glazed over that in my talk, but so if for those of you that followed this, the Department of Labor has oversight over retirement plans, and sort of ERISA is the area of law that they have oversight over. And within that area of law, there's a fiduciary standard for giving advice within sort of retirement plan context, 401ks, and to a certain extent IRAs. And so the Department of Labor, under various administrations in the last 10 or so years, has put forward a series of proposals to sort of tighten up maybe the definition of what it means to be a fiduciary within the 401k context. And, the first one under President Obama was eventually withdrawn. A second proposal put forward later was ultimately signed into or finalized, but then overturned by the courts in 2018. And so then under President Biden, they put forward another proposal last year and then finalized it earlier this year. But quickly after it was finalized, there were lawsuits filed against it, and two different federal courts, what they call stayed the regulation. So it has not been allowed to go into effect largely because, at least in the court's reading, that some of the same, I guess you would say, sort of statutory constitutional concerns or what have you that were raised in the previous rule that was overturned by the courts were still evident in this rule. And one of the judges went so far as to say that, basically he thought the plaintiffs who filed suit against the Department of Labor and their rule would almost for sure win on appeal. And so right now we are awaiting appeal. I've heard folks that follow this very closely in town, similar to that judge's prediction, say that they think maybe is a 90% chance that the latest Department of Labor fiduciary rule does not go into effect ever. But that appeals process and sort of litigating the stays, that's all going to play out over the next several months, if not longer.
Yeah.
But right now, the new rule is not in place.
Okay, great. Thank you. Turning to the election, 12 days out.
Mm-hmm.
You're in Washington. What are the top two issues you're watching in advance of the election?
Top two issues. Wow. I mean, I think for me, it's almost like I'm watching the outcome, which will inform sort of the issues, right? And so that the tax package is the big one from a legislative standpoint. It's the Super Bowl for next year. I mean, it's going to sort of take up all the oxygen in the room from a congressional standpoint. So, I'm certainly, I talked a little bit about it. I mean, some of the stuff on the investment side proposed on from the Harris side is concerning. I mean, taxing unrealized capital gains is concerning. So, to the extent that she were to win, that would be something we'd probably weigh in with policymakers one way or another on that issue, just to try to, I don't think it would ultimately get that signed into law, but it's out there. And then I think from a regulatory standpoint, I would say, like I touched on some of the stuff coming out of the SEC. The bank regulators have also put out some pretty major proposals that impact Schwab. Most people think of us as a big broker-dealer, but we also have a pretty big bank. So we are regulated by the Federal Reserve. Federal Reserve has a lot of power on the monetary policy side. They also are the main regulator for the largest banks in the country. So the Federal Reserve has a lot of power. And they've put out, along with some of the other banking regulators, some stuff on capital levels, a requirement for banks to hold long-term debt to help them the idea would be to help them be resolvable if they were to fail. There's concerns about a lot of these proposals from our standpoint. And so if the presidency changes and say, President Trump were to win, that would change the dynamic on the regulatory side quite a bit. And so you would probably see some of these proposals that are out there still, potentially, some of them at least might go away.
Yeah, interesting. I'm not sure if your role dabbles in any of the insurance industry, but we did have a question submitted about insurance. And the question is there talk in Washington about the federal government having to fund more insurance coverage as insurance companies are stepping away from coastal and high-risk areas? It's
funny. I don't do a whole lot in the world of insurance.
Okay.
But this is the second straight one of these that when I've given this talk where I've had that exact same question, which is interesting. So the thing about insurance is that it is mostly regulated. It's unique in sort of the financial services world, and it's mostly regulated at the state level. So there's not as much sort of directly relevant to, obviously it's becoming a big deal in places like Florida about the ability to get insurance on your home, et cetera. But it doesn't tend to be, because it's mostly done, the policy for insurance is mostly done at the state level. It doesn't tend to be discussed as much here in Washington. There is a federal flood insurance program that is in place. It's also massively in debt already. And so there's been talk about reforming that program for years, and that's another thing that sort of gets kicked, the can gets kicked down the road further. But so I guess that's the best way I could answer that without being fully involved in that issue. But who knows if it becomes sort of a harsh enough issue for folks and their ability to get insurance and through the sort of the state level, it could get it could raise the pressure on Washington to try to have to sort of, I don't know, step into those markets one way or another. We'll see.
Okay, good. Interesting. Back to the election.
Yeah.
There is a question here. Can there be a tie in electoral college votes? And if there can, what then?
Yeah, well, it is theoretically possible. And I actually was just looking this up today just to anticipating I might potentially get a question on this. And so I was looking into it. So if there's a tie, the vote for president would go to the U.S. House of Representatives. But it wouldn't be each individual member of the House that would get a vote. It would be by state delegation. So the state delegation as a block, so all the members from Indiana, all the members from New Hampshire, all the members from California, within their states, the members of Congress would vote. And then whoever won for that state would vote for that presidential candidate. So as of right now, Republicans control 26 state delegations, Democrats control 22, and there are 2 that are tied. And so that's the current marketplace of state delegations, but that will change probably, at least to some degree, after the November election. So we'd have to go back and see what the makeup is then. And that vote wouldn't take place until January when the new Congress reconvened. It would be the new Congress that would vote on that. So there's that. But there's a caveat. The Senate votes for the vice president, and that's each individual senator gets a vote in that case. And so they would vote for the vice president. And if for some reason the House was having trouble coming to a majority vote amongst the delegations for president, and the Senate voted for the vice president under the Constitution would be the president until the House could get their act together and find a majority to vote for the president. So there you go.
Oh, goodness.
No, it would be a mess, and the markets probably wouldn't love that.
Amen. Wow. Well, you've mentioned that we're already on a roller coaster.
It's been a roller coaster.
That would be going upside down on the roller coaster.
Yes.
Well, that's wonderful. Good information. Interesting to know that that's a possibility.
Yeah, it is possible.
Yeah.
It could come down, it's funny, there's a couple, I talked about those 7 swing states, but there's a couple states that actually break up their electoral college votes, Nebraska and Maine. And so in Nebraska, which is generally a dark red state, there's one congressional district that's sort of a swing district. And so because Nebraska is one of the states that breaks up their electoral college votes, it could come down to this one district in Nebraska that potentially, at least, it could be the swing vote either to put somebody over or put us into a tie.
Interesting. So if I'm understanding correctly, the votes from the House, there's one per state, regardless of obviously the population of that state.
Correct.
Interesting. Okay. Okay. Well, wow, Scott, thank you. All of the information has been wonderful. Thank you for submitting questions for those of you that did so. Very insightful. We very much appreciate what you've teed us up for in the next 12 days and then beyond. So on behalf of Evans May Wealth and our clients, thank you for your time and your valuable insights.
Well, thanks so much for having me. It's great.
Yeah, wonderful. Thank you everyone for joining us, and we will call it a night. Thank you. Have a good evening.
Thank you. Bye-bye.